Well, welcome everybody. Steven Sitkowski here, fresh off of an amazing fly fishing trip that I went on this weekend up in North Georgia. Probably caught 4 to 5 pound rainbows, about a dozen fish altogether. So I'm feeling pretty good this morning. Flew back in yesterday. I hope you had an awesome weekend, whatever it was you were doing. It's one of the great things about learning about the markets is that you can trade and invest literally from any place. All right. Well, I can already see I'm off my game here. That's not today's date, is it? No, it's not. There you go. As you can tell, I do things pretty organically. My name is Steven Sitkowski. For those of you who may not know me, I've been following the financial markets now for more than 4 decades. 4 decades ago, became a certified financial planner, registered investment advisor. Want you to know that everything that we do here is for educational purposes only and not intended as individual investment advice. So when you think about the market, here are your primary considerations. First, what are the fundamental influences that is exerting pressure on the market or acting as a tailwind? Consider the overall market trend. We'll do that together. Find which sectors are moving higher, which are moving lower. And then ultimately you start shopping for stocks within those sectors. So what's moving the market? Well, December is typically a strong month. So seasonality is definitely on our favor. Hasn't looked that way today so far, but boy, October or November was amazing. Gold and Bitcoin are rallying. Gold's hit about $2,100 an ounce. Bitcoin hit 41,000 for this coin that nobody really knows what the hell it is. Pretty amazing. Uber is heading to the S&P 500, so we're seeing their stock moving higher. 10-year Treasury now sits at 4.289%. Anything under 4.5 would be considered good. If we could get under 4, it'd be a windfall for the markets. And oil's down at 73.44 per barrel. So what are we watching for this week? Today, factory orders are coming out. On Tuesday, we have the services PMI and ISM numbers. We have job openings, a JOLTS report coming out Tuesday morning. We're expected to find that there's 9.4 million available jobs. Wednesday, the employment numbers from ADP come out. Thursday, initial jobless claims. Consumer credit, that could be interesting. And then on Friday, we have the U.S. Employment report, the unemployment rate, and hourly wages. So plenty going on this week. Here's last week's heat map. Look at what's going on with NVIDIA, Alphabet, and Meta. Apple kind of held its ground. Microsoft down about 3%. So some of the high flyers took it on the chin. We had a whole lot of stocks for the week that were in the green, most notably Boeing. Here's our year-to-date heat map. Been some great opportunities for making money. Lilly up 60%, Meta 164, Alphabet 46, Amazon 72, Tesla 92, NVIDIA 211, Broadcom 65, AMD 82. I mean, Microsoft 53, Apple 44. It's been a fantastic year if you're taking trades on the right stocks. Market breadth for last week. Look at the number of new highs versus new lows. On the NYSE, 286 compared to 64 new lows, 286 new highs. And on the NASDAQ, pretty balanced, 338 to 373. Finding returns, it has been large cap growth this year, producing a return of 37.2%. Wow. Here's a market scoreboard. So the S&P year to date is up just a tick under 20%. NASDAQ about 37%. The Dow 9.37. The S&P mid cap 8%. The Russell 2000 576. It has been a huge laggard. So the big money this year is made in big tech. There's been some bottom fishing going on. If you look at some of the big names in November, Expedia, look at that, 49%. Paramount Global, 46%. Carnival, 39%. Etsy, 35%. Where are the jobs growing? Healthcare and government jobs. That's where it's at. Healthcare and government jobs. I don't really see a big change in that moving forward. Leading economic indicators continue to be weak into October. Look at that. Negative territory, exactly what the Fed wants. Financial conditions took a big hit, exactly what the Fed wants. They have every reason now not to raise rates. Investors are far less bearish than they've been. They're really not any more bullish, but the bears are under 20%. Bulls are at about 50%. Check this out. Look at the differential between the bulls and the bears. 29%. It's huge. When's Fed going to cut rates? Takes an average of 8 months from the last rate hike to the first Fed cut. Here are the latest probabilities. So they're looking right now at a potential rate cut in March. You've heard me say this before. I'm not buying. I say it's third quarter. And we'll just see how it plays out. It's not that I've got, the market cornered when it comes to rate hikes, but to me, the economy still looks much too strong to be cutting rates. Let's take a look at the charts. See what's going on. Let's check out the S&P 500. There you have it. So well above our 50-day moving average. 50-day moving average is sloping upwards. We've had a bit of a rollover here. It's kind of stalled out. You would expect that after the gigantic move that we've had. If we can just consolidate here and then leg higher, kind of the next key level, can we break above 4,600 on the S&P? We're at 4,567. Remains to be seen. What about the Qs? So this is big tech, definitely has rolled over. Okay. MACD just turned red. We got into overbought territory on the RSI. So looks like it's given up a little momentum. And the IWM, this is the Russell, and it's been making a charge as of late. There's this feeling that there's a lot of value in small cap right now. And there is, if you look at the PEs. But keep in mind, 40% of the companies traded on the Russell lose money. So don't get seduced by, the PEs are low. As a group, they just have not done well at all, while the markets had a very, very good year. So, all right, that's our report for the week. Hope you have a blessed week. And I'll see you next week. Bye for now.